Yeah, hello fam, welcome back to HumbleFx, and today we are going to be talking about something very awesome. And this strategy is very awesome, and you don't want to miss any information about it. So, make yourself comfortable, sit back and watch to the end. All right, you have to watch it to the end so that you get what I'm going to be discussing right in this video. This is Boom 1000 right here. Please, if you're new to the channel, please give me a thumbs up and please hit on the subscribe button, and also leave a comment on the comment section if you enjoyed the video. And I need your feedback, is very important. Just click on the like button, is very important. All right, this is HumbleFx signing in. All right, let's get started. Now, this strategy is a double-edged sword that we use to take the spikes and also the candles. So if you see my chart, this is a very simple and straight to the point strategy that you can use to make the market successfully and with less stress. Right, this trade right now, I should be looking for entry positions. Right now, I should be looking for entry for a buy right now. All right, guys, there one more thing. If you have a strategy that you want to help others use, you can also send me a message on Telegram, on WhatsApp, and then you drop the strategy, and I will make a video on it and let others also benefit from it. Okay, so you do not be stingy. So we should be taking entry in this market. It's supposed we should take entry right now. Yeah, we should take an entry or for a buy signal in this market right now. But then, let's first thing first, you have to check on the higher time frame to see the market direction, because it's very important. They said the trend is your friend, so we want to use into that to analyze our market. All right, we see that once we open our chart, we go to the 4-hour time frame. And on this particular point here, what I was seeing here, we are seeing that the market is actually going to be selling for some time because of some of the things I'm seeing here. This is what is it called? A range left, and we want to see. We already got a high right here, which is a swing high. And also we are trying to get a range right here. So what do we expect in this market? We expect a sell at least to this point. Sorry, but even at that, we can still take some spike, because spike before all these things happen, the spike must happen. So we cannot just say straightforward. We have to catch spike. So let's go down to 1-hour time frame. Now on this time frame, we have seen that on a higher time frame, 4-hour time frame, the market is having a downside movement. Going to have a downside movement. All right, but still then on the 1-hour time frame, we are looking at this high here. So market might react to this particular place. Market might react to this particular place that we just place a line. So I should take my entry at this psychological level of 14,000. Okay, that's my entry limit. All right, I can go down more to 5-minute time frame. All right, at this point it's even more clearer. I can drop down my entry like this. 14,000 should be my limit order. That's my second order. The first order should be at this recent low here. At least you can see those lows. You can see those lows here. These lows here is very important. So this is 14,018. So this is another entry position, and then the second entry is 14,000. All right, these two entry positions should be effective. All right, once we have seen this, now go down to our 1-minute time frame. All right, at this particular point, we can zoom it out. Our zoom level for this market is from the lowest zoom level. You zoom it out 1, 2. Right, this is third zoom level, or should I call it second zoom level or so. So at this point, something is happening right here in the window indicator. We have a red on the accelerator oscillator. So that is telling us, and there is a cross of a simple line at that place at the same time. So this also is telling us that we are going to be having a spike as soon as possible, right? So we're having a spike as soon as possible. So after 4 candles from now, I'm going to enter my trade. Yes, I'm going to enter my trade, and let us see how that goes. This is actually a simple one. That is how to catch spike with this strategy. Right, so we are waiting for that. That is 14,018. We are going to be taking our entry as a buy on boom 1,000. So let's watch out for that. So don't skip this video. Let's see what happens. Even though I don't want to make this video too long, but I'm going to just see to that. While we backtest other ones, let's wait for that to come to that point. That's the first entry position that will reach schedules to be 14,018, using our higher time frame to dictate an important key zone. All right, now the thing there is that once you take your entry position, please do not hold to infinity. If it keeps going against you, do not hold to infinity. Always have a stop loss. All right, have a stop loss. Like if you enter with 0.2 as the case of boom and crash, the stop loss should be $2, $3, $4, $3. That is, we are going for 15 candles or maybe 10 pips stop loss. That is about 15 candle or thereabout. So 10 pips stop loss should be your stop loss. If you keep going against you, do not hold to infinity. It's very important, because you think it will spike, and it doesn't spike. Close your trade. Once it goes 10 pips below your entry, close that trade and look for another opportunity. You will see many of them. At least this is not a holy grail strategy, but I bet you they're going to make the market with it successfully and all that. All right, this is a buying strategy. Now let's look at the selling strategy, how to sell with it. Of course, we have seen this indicator before on my other previous videos. The one on the main chart here is another line, another indicator that is very, very accurate. I've tested it lots of time, and it's produced lots of results. All right, so what is the entry for a sell on the this strategy? First of all, you have to wait for this moving average in the winning indicator to reach the climax, right? Then the candle should be crossing over here. It should be crossing over. So you see that there should be an alignment between these two lines in the main chart and on the window indicator. So once you see the alignment like that, you take your entry. If a spike happen against you like it did here, we don't want to be afraid. Like the spike happened here, it crossed over here, and here is aligned with this. So and the spike happens. Do you think we should be afraid? No, we don't need to be afraid. We have to take that entry position and do what? And hold it. And what happened here? We got our market. At least your TP here should be up to 10, less than at least 10 candles. 10 to 20 candles is your take profit. All right, 10 to 20 candles is your take profit. Our entry is about to reach 180, 14018. So we are waiting for that. Okay, so that is your first take profit if you are taking this strategy. All right, now let's check for other selling strategy in this market. Now see also here we had this hitting the climax over here, and that is a cross over on the main chart. So what do we expect here? We expect something to happen which is going to go downside. So we take our entry at when the candle closes below that, and seeing that this is aligning together, we're going to take our trade, and we are taking something like, I said, at least 10 candles, 10 to 20, or even more than 20, but at least 10. You must get at least 10 candles. Okay, so what happened here? We got over 10 candles, even though there is spike here. We got over 10 candles. 1 2 3 4 5 6 7 8 9 10, more than that. So let me not count because it's just massive. Right, let's check another entry position. Now here we have it here also. we got another entry right about here. We had it at the climax here, we had a cross over here, and what happened, we had a massive down move. So guys, go ahead and check out this strategy. This is only based on the lines. So if we are trading against the spike, we are only considering the moving average on the main chart and the one on the window indicator one. So let's check our entry. I think we should take our entry right now on this market. So I'm going to take my entry. I'm going to use my this thing. Let me say buy. I'm buying right now. So I'm buying this market. So this is, let's see, my stop loss here is once I get $2 here as my loss, I'm going to exit. Yes, if I get $2 as my loss here, I will exit. If I want to hold more, highest is $3 to $4 now, and I will exit. I know that definitely I will recover it. So now, what is your buying conditions if you are taking a spike? We have just talked about the conditions to sell. If you want to sell, that's what we just spoke about right now. So let's talk about the conditions to buy. You see, we just place a buy right now, right? So what are the conditions to buy using this in strategy settings you are seeing here? Now the first entry the requirements for a buy of a boom and to sell a crash. Let me say we are on a boom right now. Is that this line on the main chart, sorry, on the window indicator, should actually cross the accelerator oscillator below the zero level. And the next thing is that we should see a red in that line. Now, like we see here, we see red lines coming up here. Right, these are the basic requirements. And also, we check the trend. We check also the trend. All right, so we know I have a second entry at 14,000, which is my psychological level. So when that switch, I will take another entry if it did not spike to that point. Okay, so that is the entry point, entry requirements. So let's backtest if that actually worked. Let's see. All right, we want to catch spike. You have to just hold it down like that and something like that. It's very simple. This is very simple, only if you understand it and work by it. Look at this market come down here, crosses over this oscillator, and we got a red here. And what happened at that point? The spike happened. So sometimes a spike will happen instantly, but sometimes the markets will keep going against you. So those days when it keep going against you, do not be so greedy or selfish that it must happen. No, those days that markets don't want to spike, everything is met, but it doesn't spike. Just exit the market and wait for that entry. And see it here also. Market goes down to this entry, crosses it. We saw red, this small red at this zero level. What happened here? Around here, that's happened. And before we got like 5 candles, the spike happened. At this point, we have got a lot of profit. So when the first spike happened, then you should be using the line in the main chart to take your other consecutive spikes. If you have checked the trend and is going the bullish direction. But if it's bearish direction, you should just ignore and take your one spike and close. Now, if we check also here, if we check here as well, this market actually crossed around here, and that should be somewhere here. So all this moves from here down is in loss. We are in loss. But I told you guys you should take loss of 10 pips. I believe this thing did not reach 10 pips. 10 pips is like 15 or 16 candles, but this thing did not reach. And we have an entry confirmation here. You have a red candle that formed here, and what happened? We have spike that formed consecutively. So anyway, I wouldn't know that all this spike will happen. I will not know that this thing will happen. Yes, I don't know, but I will not I will not end my trade at the first spike. I will actually wait for a candle or for 2 candles to form before I close. So once you get a spike, you wait for like 3 candles to form. If there's no more spike that happens, then you close your trade and you go away. That is if spike did not happen after a 3 candle or 4 candle has formed. You close your trade and you get away, something like that. So these are that's the entry positions for buying, and yes, for buying the the boom 1000. Now look at it also here. It's crossed over here. We got a red here, and spike happened at least 4 candles after you entered. Then you got the spike. You get the spike, guys. So this is just very awesome, guys. Very awesome. So we are still waiting here. We not got a spike here, but we are waiting for spike to happen. We are seeing the loss of 83 cents. So we are waiting for this spike to happen. But I presume I'm seeing that a spike should happen, even though that this thing actually a downside movement is moving down and lead to this point. It should reach this point before it keeps on spiking, if it will spike. Yeah, but I should see a spike that will happen. And let us check for crash 1000. Crash 1000 is also another thing. We could have the same things applies in this crash 1000. If we are buying the market, if we are buying from the crash indices, we have to wait for this to come at the climax downside, and then wait for a crossover. So when these things are met up, we don't want to be afraid. We are going to take our entry. And what happened here? We had that massive movement. Okay, the same thing that happening on the other side is what we are also happening here. Look at it here. The climax crossover here, and then it moved. Simple as that, guys. Simple as that. It happens so many times. Now if you want to sell on the crash market, okay, I'm going to sell now. I'm going to sell the market right now, and I'm going to close it once there is a crossover in this place. I'm going to sell this thing right now. I should sell it right now, and I will close it after like five. This is just a low risk trade. I want to take a low risk trade here. So this is a low risk trade. So this is a low risk trade. Do not bother if you close in loss. Yes, do not bother if you close your trade in loss, because definitely you always win. By the end of the day, you will always win the market. Now let us check on higher time frame and see what's happening in the higher time frame. All right, checking on higher time frame, I see that this market is actually bullish market. It's bullish right away. It's bullish, so we know that it's going to buy more and more. But why am I taking the entry as a sell right there? Because I see this small level here can be effective. So once the market goes below this small level here and spike did not happen, the next thing I will do is I will close my trade in loss. If my market goes above this small spike here, maybe 2 candles above it, I'm going to close my trade. Yes, I'm going to close my trade and do for another entry. This is a clear bullish market. So to catch spikes on a bullish market is not always that simple. But if this market is bearish, you will catch much spike. Like if we are on a bearish market condition, we will catch spike easily than when it is bullish. It is easy to catch spike around this region as a bearish market than to catch spike when it is bullish. All right, so that is one thing you should understand. So check the market first to know what it is doing. Because if it is bearish, I can hold a trade for longer knowing that most it's going to spike. But when it's bullish for crash indices and it's bullish and you're holding your trade, you are just giving yourself problem, because before it might spike, you must have lost patience and you must have closed your trading loss and all that. So that's why you don't want to hold a long trade in a bullish market in terms of crash indices. On boom, you don't want to hold a long trade you don't want to hold a long buy in a bearish market. Just like we are taking trade now on this boom 1000. Of course, we saw a high time frame, it is bearish, so we now want to catch spike on it. Okay, so if the market did not spike and I have here $2, I will close that trade. I'm going to close it. Highest I will have there is $4 loss, and I will close them because I know that it's bearish. So if I should hold it and maybe the market did not spike and it reached this level and crossover, you know, I will be in a massive loss. Now look at this thing from here. If this thing from here is a pin bar on a high time frame, which indicates a massive bearish momentum, all right, and that will give me big loss if I should hold the trade and close it at a small loss. That is one thing you should understand. If you are like, if I came and I saw the market like this bullish, I will be very happy, because if I take entry, I will know that it must spike. It will spiking. But here now we are bearish. So if I should hold this trade too long, I'm going to be harming myself, because it might decide to just go down below and keep going down, and I will be in a great loss. So guys, learn to manage your trade. Learn to exit with small loss. Don't blow your account any longer. All right guys, I'm trying to wait for this thing to happen. This is already broken out that place, and at this point I should close my trade. It's already closed. It's already gone above that line, so I should close now in loss. Yes, it's important. I should close now in loss. This is small loss, but if I will win, I will win more than that. If I should get a spike, I will win more than that, guys. So you don't have to be afraid of that and all that. So even though I have entry signs here, look at entry sign I'm having here. Sorry about that. I have entry sign here from the indicator here. I have an entry sign. See the red for me here. But in market condition of the main chart, that is the price action, is saying that this is a bullish market. So I have to wait. I have to relax and wait for it to start to spike. Maybe after the first spike, then I can now look for entries and all that. Yeah. Now this one I reached $2, but I told you guys my highest I will hold this one is $5, because I'm trying to enter again at 14,000, which is my second entry position, using the higher time frame analysis to check it out. All right guys, this is HumbleFx, and I will see you in the next video. All right, this is Boom 300. I took trade on this long time, maybe about 2 days ago or thereabouts, and we'll be holding that from the VIP group till now. We are still holding it. Look at that. We entered it at a massive at a strong zone, and we are holding it for a long time. Look at where we entered the market here, and we are holding all the way down. We want more. We want more downside movements. That's just a pullback. So we want more downside, but we are still holding it to a particular point, at least this point. So it's going to be a massive turn up. Alright guys, see you in the next video, and the next video should be a massive one for you guys. Enjoy.